A 5 to 7% pullback could be imminent, according to FundStrat's Mark Newton. On top of this, sentiment survey reports show something very different this week than last, and bullish percent index starts to weaken for the very first time in quite a while. That and more coming up in today's show as we cover the big opportunities, the huge moves potentially about to happen, and day 5 now of a coiling market after the 10-10 event from Tesla. What is going on in these markets, guys? Let's break it down together by going through stocks, commodities, and cryptos. We'll see you in a moment. This one is not to be missed. Well, welcome back everybody to the Daily Show. It's great to have you here. My name's Tom, and in today's video, we'll be going through everything that we need to know about markets right now. It was a pretty good day for semiconductors, but then they sold into the close. And I think that brings us to the big discussion point here. Are we seeing a market that is taking profit leading into potential seasonal weakness here into the US election? Well, one of our favorite indicators is starting to agree with that pattern. And of course, as we know, bullish percent index has been used on this channel several times to kind of find market pullbacks or, of course, sideways corrections. Now, what happens here? Well, we're looking for bullish percent index to go from 80 down to below 75. And we're not quite there yet, but we have started to see the signs. Now, this has been a great read since 2021. And that coupled with, of course, our latest sentiment survey results is telling us a storyline of people are feeling a little bit maybe too bullish here. And maybe the market wants to take some of their money. We can see his latest sentiment survey results do have kind of less people going bullish, actually, a little bit more people turning bearish. And while this by itself doesn't mean much, it's that bull-bear spread that we talked about last week. We went up to the danger zone of 30 plus, and now we've pulled back a bit from that. So could this already be a sign of turning points in markets? Well, there are other reads as well that we need to consider. And one of those is the CNN fear greed. We know that when everybody turns to extreme greed, we need to be potentially fearful. And while this is not the most solid read to get out of markets, you can see here when we went extremely greedy, it just pulled back for a little while. Basically, it's still a point that you might want to consider. And like anything, we build a complement story of data and different reasons on this channel. Now, Mark Newton does the same thing, and he's got quite a lot of reasons why he believes that we could be getting a pullback over the next 3 weeks. Now, as we say on the channel, the big thing that we use that's big difference is that we want to see technical analysis confirmation, and that is not something that we've had just yet. But let's consider some of these things. Reasons for a short-term concern into November. Negative momentum, RSI and MACD are not currently following the S&P to new high. Intermarket divergence between the NASDAQ, Russell, transportations, etc. is happening. And of course, if you're a follower of Elliott Wave, it looks like we could be nearing the end of the last run in terms of a 5-wave advance. Lack of bears on the sentiment survey result is something we like to use here on the channel as well. And of course, if we're talking about seasonality, which hasn't really been playing out this year, then usually October into the beginning of November is where you start to see vol, and you then generally go towards the bullish side. Now, I also think that breadth erosion is an interesting concept here because basically the percentage of S&P 500 members above 20-day MA has dropped from 91% in late August to 60% in the last week. And this is coming more into all of those other readings that we're getting, along with some overbought kind of signs. So let's now talk intra-year declines versus calendar years. Now, a lot of people are pointing out that this is a very bullish year. And of course, it's the year 2, which we've now completed, of the new bull market. The thing is, though, we haven't seen a negative 10% correction. We got about 8 and a bit this year on the S&P, and we got around 10 plus on the NASDAQ. Now, I don't believe we need this year. And in fact, I don't think the pullback is going to be in the vicinity of 10%. That may be reserved for 2025. And we'll talk more about this chart in a subsequent video. But we do need to consider both the good, the bad, and the ugly. So let's say we've looked at the bad right now, the possible overbought market. What are the good signs in the markets right now? Well, the best thing is financials. And you can see here with the latest update from Grant Hawkridge over on X that financials are absolutely ripping. More importantly, look at those S&P 600 financials, the KREs of the world, the regional banking. that we are just seeing extreme strength there. And I think that's backing up the idea that we're going to see further deregulation of banks and, of course, more debt being written. The market smells GDP increasing, and this is a huge deal. So whatever correction we do get, if we do end up getting a pullback in markets, it's more than likely going to be bullish. If we have a look at S&P 500 revenue growth, that is also showing signs of overall growth. And this is a big deal. You know, of course, markets love a good story around growth, and whenever they get it, they tend to, of course, pack it into price. US rail traffic is also agreeing with this. The latest traffic data from October 12th actually shows a year-on-year increase, and we're noticing that total traffic is up and also intermodal units is up big way. And this has been kind of fluctuating in recent kind of months, so this is another great sign. On top of all of this, we also have a strength in the financials and the industrial stocks. Now, whenever we see these, according to Sentiment Trader, they've actually compiled the results. And when we tend to get these huge thrusts from those particular sectors, you wouldn't want to go against the market over the next 3 months generally, and you certainly wouldn't want to be against it over the next 12 months. It shows that mid into late cycle style investing circle, and this is a big deal when it comes to being a longer term or medium term bull in markets. Will we get pullbacks? Of course, there's always another problem in markets. The question is, will you be able to buy them? So one of the ones that we had recently, which was the August sell-off, where everyone thought that, of course, Japan was going to explode, we were doing a live stream on it, and we talked about how we didn't think it was as big a concern as other people were playing out. Japan is well known to be one of the biggest debt markets in the world and biggest concerns for most people, but it wasn't the time that it was most likely going to happen. The key to markets is really recognizing, is this the really big one, or is this more just noise that we need to be paying attention to? For example, this week, we saw ASML with some bad earnings, and that ended up leading into, of course, people selling off all the semiconductors. And in general, then we saw 24 hours later, TSM come out with a great result. And of course, the market's fully recovering on those particular sectors. So median monthly flow, equities into mutual funds. Now we know that everybody likes a good bit of profit, and funds will be chasing this year because some of them are behind the S&P 500. They want to try to get those superior returns. Now this can create a very volatile period over these next 2 weeks into the week after the election. Because what that could do is it could create a whole bunch of instability, storylines, taxation this, tariff that, whatever else might come out. And then they jump in to try to get that outperformance by the end of the year. Now, this is important because, of course, we know November is one of the biggest inflows when it comes to funds in the US. From the market, though, we'll go onto the charts in a moment for the S&P 500, look at the options flows, but I want to continue to talk about crypto here because, of course, in recent weeks, not always talking crypto here on the channels, we always cover Bitcoin, but this has been one of the biggest flow stories. And that is that we're going from a period of significant underperformance from Bitcoin to now a big move coming. And of course, we talked about in our last couple of videos that Bitcoin is seeing the highest in 4-month flows. It's seeing liquidation of giant whales. And of course, we're starting to see signs of great technical balance. Here's just one that we shared over on X showing a great trend line on a log scale here for Ethereum. We do like log when it comes to generally Bitcoin and crypto and Ethereum. And we've got a symmetrical triangle. And of course, we've even got the potential here of an inverse head and shoulders. Now, has Ethereum broken out? The answer is quite simply no. And Bitcoin, of course, is still struggling with its key resistance. But if it does break out, do we think that it's going to make a new all-time high? It seems quite likely. And the right types of things have been happening. Huge dark pool activity on coin, huge movements in flows, and of course, big moves just across the board in the cryptoverse, which probably means bigger funds have been starting to position for the bull end. So we know that TSM was the biggest earnings of the last pretty much week, other than, of course, the banks, and it managed to live up to most people's expectations. As always, there's still a few things here. The American Express release is on Friday, and we're going to see a ±6. We have to expect that most of these are going to be good. But quick little summary here from the earnings nugget. You can see that TSM pretty much achieved what you would have to hope is good result. Q3 revenue increased 12.8% to 23.5 billion. And this actually meant the gross margins improved to 57.8%, exceeding the guidance, which is always a good sign. We also saw a full 24 revenue expected to grow close to 30% year on year. And of course, we have the normal AI-driven demand, technology leadership, etc. This is not a bad result for the semi market. And of course, it starts to strengthen the case that whatever pullbacks we get in the semis in particular will probably be purchased up. No new big dark pool activity to mention over the last 24 hours, but I did want to mention one thing, that Ethereum funds had seen inflows into them. And of course, we started to see a little bit of that sign of potentially buy the dip coming through from the China sell-off in recent times. That's something we've expected. Of course, we expected China to sell off about this hard, if not even a little bit harder. We'll look at that soon. And then we're liking the idea that it's going to wait, stabilize, and then look towards China probably doing between a 7 and 10 trillion yuan basically stimulus package. That's what the market's going to want, and it's probably eventually going to get it. I would say it's post-election, though, in terms of my thought process. Now, if you notice, what are the two best sectors of the last 5 days? Yep, it's financials. Again, very strong here on the financials. And this is the type of thing that you want to be seeing when it comes to a healthy market. And it doesn't mean that necessarily everything's fantastic behind the board. It just means that debt's being written, and generally that goes into GDP growth, and the market's sniffing that out. Semiconductors were the best over the last 24 hours, driven by TSM's earnings, and gold stocks continued to find strength, which of course makes sense because gold made an all-time high. Very happy with that, as I'm sure many of you out there will be, because yes, we've loved gold since 1800 an ounce, and let's hope that thing's going all the way to 3,000, because of course that is what we were looking for. Maybe even higher if we have to keep revising this thing up, because gold is pretty underpriced still in the markets. Let's have a look at S&P 500 from the day's perspective. Now, sometimes I like to use kind of the daily volume prints in terms of delta, and you'll notice here when we go up to the top, we're starting to see a kind of trend here at the top. Generally speaking, although we do have this big positive, we've got 1, 2, 3 negative overalls and 1 positive. And what this is kind of starting to tell me is maybe we are starting to see weakness here in the markets. There are overbought signals. The key really is in this sell-off that's near the end. And whenever you see one of these, then you can go over, and we actually did the analysis yesterday to say, will we be seeing the same as this? Well, in some ways, I guess the last 24 hours kind of does look the same. We've got the engulf that happened on the SPX. Then, of course, we get the rally up to a new high. And then will we now see a new lower low? So, of course, the lower low level that you may want to watch and set alerts for is going to be about 58.06. And if this does end up getting taken, then that could bring in a negative gamma style situation and obviously push us back to 5,700. Now, the key levels are going to be probably around 5,790 and 5,700. These are the two most obvious zones where bulls are going to try to defend the market and push it back up. If we do manage to get below 5,700, well, that opens up significant other levels that we'll talk about in the future. So make sure to subscribe for the channel. And just remember, these are the options high and low levels for the next 24 hours. So if you're interested in checking those out, put it there. Let's now go to positive gamma, because we know this has been the storyline of the week. Basically, the market started in significant positive gamma. It pushed higher on Monday, and since then, it's not been able to hold above the key strike levels on each session. Now, the key strikes level for Friday is 58.25. And you'll notice near the close, we were trading above that. It's probably likely that the market will try to close below this to not pay out all of this options premium. But if the market does rally up and it closes strong for the week, then of course this could lead into a 5,900, as that's the next call strike for next week. And I think that's very important. 5,900 seems to be quite consistent when it comes to the next strike over the 0 DTEs. Now, you might notice something about the puts. We're getting a wall created next week at 57.50. So anywhere between 57.80 and 57.50 seems to be where the first kind of really strong buyer could come in if we do end up getting a pullback. Some interesting stuff there in the structure in the markets. Now, when we move from the S&P over to a couple of the single stocks, let's have a look at Tesla. Now, first up, what is Tesla doing? Well, Tesla is sitting in a very, very tight range. And I think we said it's 5 days now of trading days, maybe even more. Now, this means that we've got what we call a coiling market. And if this market ends up breaking through 225, guess what happens? We go into a positive gamma situation. Now, that coupled with the fact that it's an island reversal, if it gaps above the 225, could be a powerful momentum technique. And I think a lot of bulls will be looking for this 225 plus move on Tesla. One to watch. We're certainly doing so on the channel. Let's move over to Nvidia. New all-time high. Yeah, it did it. And then it sold off. This may be just to basically not allow the markets to go too much in positive gamma. Again, that 138 to 140 strike is a huge level for these markets. And it also could be to trap people into a buy and then crush them a little bit into a pullback. Remember, some of these funds are underperforming this year, particularly momentum funds, and those guys are going to need to do some catch-up play, which strengthens that kind of argument, I guess, that the next 3 weeks could be a little bit volatile. Would we be worried about the longer term? Well, we saw rail traffic is looking good, the fundamentals look good, and in general, whatever the excuse is for the sell, at the moment, it's pretty good. And that coins us into something that I'm going to continue to mention here, which I've heard helps you guys. So let me know if it does in the comments down below. And that is, if it's in the press, it's in the price. Basically, don't listen to the articles. Make better assumptions based on data, based on structural history, and of course, number one, the technical analysis. Ultimately, the flows won't lie, because guess what? Wall Street and the algorithms are putting their big money behind it. So let's follow what they're actually doing and not necessarily what we're being told. And I think that's a very important concept. Let's move over to treasuries now. Treasuries fell back down anywhere in here, though, between 90 and 93 seems to be a pretty good level for treasuries. The dollar has continued to strengthen, which is in line with what we spoke about over the last couple of sessions. And obviously, we've been bullish on the dollar. We didn't see any weakness at the supply level, which is, by the way, where I take profit. And at the moment, it looks like it's moving towards 104 for a potential here of the next key resistance. When we move to other markets, though, things are starting to look a little bit better from the structural side. Copper in particular has fallen lower, which we expected it to do. It's now oversold, which is good because, of course, that means there's a chance of it turning up. And we have our potential bull zone. Downward trend line, good little resistance high. If we manage to close through that, that could be a sign that China is coming back with the buy the dip as well. So this could be a good metals play through things like iron ore, copper, magnesium, who knows, other stuff. Basically, anything to do with China and the recovery could be an area of interest. Now, speaking of metals, gold just made another all-time high. I've got to clap us all on this one because, yeah, I cannot say enough good things about gold in 2024. It has been absolutely stellar. That and utilities, and actually, if you can believe it, nuclear, especially over the last week, has been absolutely rocketing since we've actually bring that up in a moment, since we bought it on the show. This is pretty good stuff, and gold is getting it done. Now, how high could it go? Well, obviously, eventually, I think it's going to hit $3,000 an ounce. However, at this stage, it's just a couple of steps up, pullbacks, couple of steps up. It's been holding that daily 20 very, very strongly here for the last couple of months, and we keep following the trend. Now, with gold doing well, silver has to eventually play catch up. And this one, while we're in consolidation, still hasn't broken through. But boy, oh boy, are we going to be watching this together, because silver has a fairly good runway. Great wicks. Let's get the weekly close. Will it get through 30 up to 34.50? It's our belief it will. But at this stage, we're waiting for that next breakout to get the momentum move. Speaking of other things finding buys, take a look at oil coming back down to our trend line and giving 3 weeks. Now, that's no joke. And of course, we still want to see it go above 72 probably a barrel. But this is a good sign. It's forming base. Now, it could easily get crushed back down. So this is not, it's too early to tell. But some swing traders may be saying, or position-based buyers, maybe saying, you know what, I'm pretty interested in oil at these areas. Maybe you've got stops below the significant lows down here at 65 a barrel. It's an interesting level. What do you guys think? Is oil starting to look a lot tastier in terms of a trade? I think it's starting to heat up there. Let's move over to Tesla now. 1, 2, 3, 4, 5. Wow. 5 little moves in terms of overall daily ranges, but that is a coil and a half. So this is the perfect candidate for that type of island reversal. If it does manage to gap above 225, we know because of our analysis that there are a lot of calls there that can create a positive gamma event. Yeah, it's actually pretty interesting on the charts. We do cover Tesla here daily, but sometimes it's boring. This is actually an interesting level. It doesn't mean it's going to go bullish because we don't have the catalyst, but we do know that it's coiling, and that usually means a big move is just around the horizon. Let's talk Nvidia, new all-time high. Yes, I think it tapped it. And then, of course, it's sold off. Now, this is a great stock. We love Nvidia. We think it's going to go higher in the future. But, of course, if it does find pullbacks and we do get this correction or pullback or whatever you want to call it in market volatility, in general, this could be a good point where they may have trapped some retail traders. So I think the medium-term investors might be happy with it. And, of course, shorter-term traders will be a little bit scared of these highs. Semiconductors, middle of nowhere land, basically still within the good break, but it hasn't actually managed to close above this gap fill zone on the weekly. So we would have liked to have seen that this week, but still, I think overall it's still positive towards semis. And at this stage, any pullback's probably going to be met by bull demand. Let's move over to uranium. Now, this was just a story that we've brought up uranium a few times in our live streams, in the show as well. Sometimes we bring up and we focus on a couple of sectors and different areas when it is worth doing so. And this was just a welcome, nice surprise. Now, of course, we all know AI absolutely destroys energy, as in it needs a lot. And of course, we are in a worldwide AI race, which of course America is trying to win. Now, we've seen Google make deals with little micro reactors and all sorts of things going on, and uranium in general has been running hot. So this has been a great TA trade, something we've covered in our private community from a TA level, and yeah, pretty nice stuff there. Another good trade this year has been HSI. And of course, while we think it's going to turn to the upside and keep doing well, because we do believe big stim's coming, it's not quite at our key level yet, which is about 19.5 to 19,000. And we'd like to see it fall lower. But for some position-based traders, that people that are going to buy the dip and hold it for a while, maybe this is still okay. Of course, you've got to do your own analysis. It's certainly better than up here when everyone was FOMOing it. And as I mentioned, when we were on TV only a few weeks ago, and it was actually early, basically it was which day? Friday, 4th of October. I remember they said, can we put your China chart on the front, like do it first? And I said, yeah, that's no problems. And I immediately knew it's because we were talking about it as resistance and everyone else was FOMOing out of control and talking about how it was going to go to the moon. And whenever you see that, it's always surefire sign to say, oh, wow, we need to be thinking differently. Now, everyone's going to be scared of it and saying, well, they're not doing enough. Of course, we're looking for the price action as always, guys. Aussie 200 still strong in terms of overall market, but if we do get some form of pullback, of course, weekly 20 will be needed to look at. So shout out to the Aussies out there. We do have strong metals. We obviously have good energy and banks. So in this case, it's going high because of the banks and a little bit of recovery in iron ore. But that could do even better if we get massive China stimulus coming through later on in the year, probably post-election. US 2K, very nice move. Obviously, weekly close will be all important. We'll continue to watch this one. We've been bullish on this week, and we believed it would be the best index of the majors. And so far, so good. Do I think it's going to 24.30? Yes, I do. But that doesn't mean that it can't have a little bit of a movement up, down, and all around in between. At the moment, I think it's looking quite strong, though. US 100 looks way worse. Of course, this hit into our 20,425 resistance. And actually, if you break down small time structure here, it's actually technically bearish from some people's perspectives. You could go a bull end here with stops below here, or a bear actual position around this area with stops above the high. For the first time in a while, it doesn't look good. And it's the worst it's looked because of that big rejection candle for a little bit. Now, would I go and short the US 100? I'd rather buy the dip if it does end up happening. But in this case, yes, you can see here the case for kind of sideways to even down action. And some options traders may like that over the next 3 weeks. Some signs of weakness as we've hit many good levels. Now let's talk Bitcoin, because that's hit a monster. And of course, 68.5 is a huge deal. Love the consolidation here. Very nice. That's exactly what we want to see. I'd like to get consolidation for even more days, maybe the weekend as well, then blitz it by going through 69 and a bit. The thing with Bitcoin is because now there's so much derivatives in it, maybe they could even push it over the weekend and then create like a massive squeeze event. I tell you what, I wouldn't want to be offside in the new move when it eventually does happen. Ethereum is the same. You can see here 1, 2, 3 long leg dojis. What's that telling you? Oh yeah, we're coiling. We're getting ready for a big move. Maybe it'll do something like that. It could just blitz through as well. There's a lot of good signs in terms of structure. And I do read your comments, so I know a lot of people are like, oh, stop talking about, well, some people call it the Ponzi coin. In my opinion, you follow the price flow. That's what this channel's about. We follow. This year, we've talked about utilities. When the hell do you talk about utilities? We liked gold. We liked silver. We obviously liked AI stocks. And now we think crypto has a better structure on it. Sometimes we like China stocks as well. We like China stocks this year and no one else liked them. The point of the channel is to follow Wall Street's flows and the big money. And that's what the markets are. They're all connected. You know, the beautiful thing about this channel and what we do here together is we cover so much to show how the flows are going through. Sometimes it's going to be US dollars, one of the best investment classes. Sometimes it's going to be oil. And maybe right now, crypto is starting to look like it's waking up. So this is what you've got to be looking at and, of course, following along on it. If you enjoyed today's video, then please remember to subscribe, smash that like button, guys. It does help us out. And obviously, if you want to know more about the replication trade, some of the ones, particularly that Bitcoin trade the other day, and of course, some of our great wins here on metals recently, then check out our flash sale. Specifically, the day trading masterclass will help you out a lot. Follow us on X as well, as you can get a lot of the charts that we share on these videos from there to do some further study on. Thanks so much, guys. You have a fantastic day, and we'll see you in the next one. Bye for now.